Today I'm going to cover three topics. A piece from CNBC where Scott Wapner is interviewing Tom Lee. I'm going to make a comment on what's going on in the stock market and help give context and perspective to that. And thirdly, I'm going to play a piece from David McAlvany in his recent podcast that he did last Wednesday. And sometimes I show him. It's very interesting, and I'll introduce it when I get close to it. Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is September 10, 2024. I'm going to begin with a piece from CNBC where Scott Wapner is interviewing Tom Lee from Fundstrat. And I thought, I've watched Tom Lee over a period of time, and I thought that he did a good job of summarizing really what has gone on recently. And last week was very negative in the market. And he explains the degree to which it was negative, gives it context, and then his view of what's going forward. Of course, last week was a rough week. It was the worst week in the market in the last 18 months. The S&P was down about 4%, excuse me, which is a lot for a week. And the NASDAQ was down about 7%. So, a negative week for sure. He makes the point that the fundamentals do not support this correction. The fundamentals of the stock in the market, the S&P 500, for example, do not support this kind of correction. I think what happened was that it was an emotional reaction to the jobs report and from the potential of the interest rates being a 50-point basis hike. Now, a 50-point basis hike, I don't mean hike, a reduction in interest rates by the Fed of 50 basis points should be a positive, but it depends on how they spin it. So it could easily be perceived as the economy's in trouble and we need to step up and rescue it. And in that case, it could become a negative. The market is anticipating rate cuts that could go either 25 basis points, as expected for sure, and maybe even 50 basis points. And the estimation of it being 50 is increasing in its likelihood. NVIDIA, one of the Magnificent Seven, of course, a very hot stock, dropped 30%. And it has dropped 30% 8 times since its beginning. And then once it does, it takes off and goes up again. So I don't know what that means this time. It may mean that NVIDIA is ready for another run. It could be. But it was those that hold NVIDIA, that was probably painful. Tom Lee points out that he sees this as a buying opportunity, not a mandate for selling. So I think that, and I'm recording this on Monday the 9th, and on Monday the 9th, so far, the markets are showing strength following this big negative period on Friday. So that didn't surprise me. And so anyway, take a listen to this piece from Tom Lee.
Great to see you, Scott.
What's going on here, Tom?
Well, it's been a rough week. I mean, this September first 4 days were down 4%. It's actually one of the 5th worst Septembers since 1928, so it's pretty bad. I don't think there's actually a lot of fundamental arguments for why stocks are down this much, but I think we've pulled forward seasonality. This September to November period last year was really tough. Historically, it's tough, and I wonder if markets are going risk off early.
So you believe in the soft landing story. You said there's no fundamental reason for this. This is a debate over soft landing versus something worse. Market seems to be tilting towards something worse. You say no.
Yeah, the reason I don't think it's something worse, and we don't know, is that the jobs added was better than July. Remember, July was the hard landing fears because it was such a weak number. And in fact, the number of industries adding jobs jumped to 53%. That's the best in 6 months. And the unemployment rate fell. So I think we're at a point where the Fed could engineer a soft landing, and that's why 2 weeks from now it's going to be important.
50, 25, does it matter to you?
I think it's going to be how the market interprets either number, because there can be such thing as a dovish 50 or a hawkish 50 or a panicked 50, even a hawkish 25. So I think the reality is the Fed is on a cutting cycle. That's really a good catalyst for rotation. Interest rates are going to fall, and it's going to help industries like housing, autos, credit cards come out of this recession. So I think it's good news when they start cutting.
Okay. What's happening in tech? We said that the NASDAQ's down more than 5% this week. We're having the worst week in about 18 months, and the tech sector itself is off more than 7 on the week. What's going on with that trade?
Tech, I think, revealed its hand last week because NVIDIA had a good number, but it fell. So when stocks fall on good news, it's either a crowded trade or something bad could be coming. And then, of course, they led the downside this week. I think it is part of this pull forward the seasonality because people want to de-risk, and tech is a big holding. But I think on the margin there could also be a political aspect to this. Trump's probability of winning actually increased this week in the betting markets and in the polls. And I know investors think he'll be tough on China, which would be bad for semis. So I think part of this could be fears that a Trump gaining is bad for semis.
What if there's just too much priced into these stocks at this point? Valuations have gotten a little too rich, even if they're the greatest stocks in the world, which you've made the argument that, in fact, they are, that this is the place you want to be, maybe more than any other. And what if that's true and the multiples still don't make sense?
I think it's possible. In NVIDIA's last 10 years of history, there have been 30% drawdowns, almost 8 times of similar magnitude. Its PE, NVIDIA's forward PE, was actually higher at the bottom of those drawdowns. Right now, NVIDIA's forward PE is in the mid-20s. So to me, this looks like a normal profit taking. Maybe it takes NVIDIA down to the 90s, but I think 2 years from now, that's really going to be a gift.
So when you look at all of these, are you a buyer on the dip? Are you urging people who read your research and listen to you here and elsewhere to do that?
We're close to that point because let's say we thought that there would be a 7 to 10%, the risk of a 7 to 10% drawdown between now and November. We're almost down 5% now. I think next week we could be within that point of where we pulled forward that entire correction into the month of September. So I think we're close to the point where, I wouldn't be a seller here, and I think the lower range of the S&P's 5,400, 5,350, we're almost there now.
You think the move from August 5th to, let's say, September 5th was justified? Was it too much? Was it built on reality? What do you think?
It's hard to know. I know that there was panic that caused that 3-day drawdown, and the VIX spiked to 66. So we know that there was panic. But we also know there was a ton of cash on the sidelines already into August that was put to work. And I think part of this was a liquidity move because we know the yen was highly correlated with that move. And it's kind of happening again. The yen's turned strong, and it's been putting pressure on stocks.
Now, I want to comment. I get the opportunity to talk to a lot of people, and there are 2 kinds. I want to give you my perspective on investing, buying, selling, risk, emotion, etc. in the stock market, particularly following last week's negative downtrend in the market. There are 2 kinds of investors. There are buy and hold investors, 60-40, strategic investors who buy and just stay with it. If you are one of those, and I know that some of you are, if you're one of those, then you have probably gotten it in your head that you have to be prepared for a deep decline, different kinds of decline. One of those, periodically, not every year, but periodically, is a crash, a collapse. We've had them before. We've had many of them before. Warren Buffett has gone through 4 of them since the early 70s, where the market has lost on average, about 50% of its value. And he understands that. And he's even accumulating money right now. He's now got over $200 billion accumulated to buy stocks when they go on sale, as he calls it, and in a crash. The rest of his holdings, the majority of his money, he understands you hold your breath, you close your eyes, and you get through it. And so that is part of buy and hold investing. So from a crash perspective, if that's you, from a crash perspective, you have to get your mind and your emotions around this idea that whenever it occurs, I'm not saying it's right now. I don't think it's right now. I don't see it in the immediate future. But if I were to say, when do I expect it? I would, for me personally, I think in the next 2 or 3 years, we're going to have something like that. Some people think it's a little sooner. Some people think it's a little later. But I would say in that 2 to 3 years would not surprise me if we had a crash in the magnitude of 40 to 50% drop or more. But you have to think about it. How do you want to handle that? Because if you don't think about it, what tends to happen is emotions come into play, and then you make an emotional decision, which is usually the wrong decision. You end up selling at the wrong time, and then you don't know when to buy back in. So a thought through, careful methodology, even for a buy and hold investor. Most buy and hold investors say, yeah, I believe in not selling. I'm just going to let it go down as far as it goes down, and I'll write it back up. So the second thing for a buy and hold investor, the second thing that can happen, and this happen more frequently, and that is a pullback, a correction. And I would say a pullback would be in the category typically of about 15 to 20% decline in the market. If it went 25, that's still a pullback in my view, but most of the time I'd say 15 to 20%. And you, as a buy and hold investor, most people in that category, they weather it. Nothing shakes them out of that. They don't like it, but they stay the course. And then the third level of risk is a smaller level, and I call that just normal day-to-day volatility. And certainly buy and hold investors, I would think, would not be shaken by that at all. And that's where you have, for example, a week like this last week. That would be an example. It could happen over a week. It could happen over a month. But that kind of pullback is what I call normal volatility. And just about everybody has got to accept some kind of normal volatility. The other type of investor is a active management, and that's what we do. We do more active management. We get out of the way when risk begins to enter the market, and that could mean a 5% correction. It could mean as much as 10. I would say somewhere between those two, maybe 7 or 8 is usually when we trigger out, but it could be sooner, could be even a little later. But we are not willing to accept deep risk. That is designed into our strategy is to get out, and we go to money market. And that's our approach. So I follow a mathematical approach because, like you, like all investors, I have an emotional side to me. So if I see that and pain got too much, the temptation is there to want to get out. Well, I know that's the wrong thing to do. So I use the mathematical approach. I follow it precisely. And, that's how I deal with it. If you are an active manager or you're an active investor, either you're doing that or someone's doing it on your behalf, then you've got to think about, okay, what method do I have to get out? I hope it's not, I'll figure it out when I get there. Then it comes down to, in my opinion, down to emotions, or I think this, I think that, which is very subjective. So that doesn't work for me, but you have to think about what method you want to use in the event, and you don't know in advance that it's going to be a crash. All you know is it goes down. Like last week, it went down. Is it going to go down further and further and further over a course of several months or a year? I don't know. It could. We don't know the future. So the other kind, as I said, is a correction, a pullback. For an active investor, we really want out of those. We really, as much of that as I can get rid of, the better. They're a little bit painful, they're frustrating, and my trigger to get out is way before a normal correction would occur. But you have to think about, for you, where is that? There are people who are like, okay, I'll just write, if it's in that range, I'll write it out. There's others who get out much sooner. So again, my recommendation is for you to do it mathematically, to have some kind of something that's not tied to emotion. And finally, there is day-to-day volatility, and most of that I put up with. Again, if our indicators say get out, then we get out. I've said this before. I'm not going to say too much about it, but we have developed an AI model, and it's quite sensitive, and we're testing it right now in real time. And again, it's active management. It's encouraging. It's all in how it's designed. I like the way ours is designed, but I'll speak about that more. But it's certainly designed to get out of both of the correction and crash categories and some of the day-to-day volatility. Okay, so think about, for you, what it is to handle whichever category you're in, to handle those kinds of market conditions. Okay, next I'm going to introduce this piece by David McAlvany. He does a podcast called the McAlvany Weekly Commentary. I subscribe to it. I enjoy it. He's very thoughtful, smart, and had a period of time on Wall Street, and now he runs a firm. They have a component in precious metals of their company, and they have a component in stock market investing. So he talks about, he spent time, his dad, who is now retired, but over the years visited South Africa many, many times. He says 30 times for his dad. I don't know how many of those included him. I think quite a few. And so he knows the country very well. He knows the geopolitics of the area, knows the economy. And the thing about South Africa is it is very rich in natural resources. So among those is gold and platinum. And I don't know how much silver and, other kinds of metals, but it's known for that. Of course, Russia is also known for that. He goes into the economics and the history of South Africa from his perspective. And he relates it. He says it a little bit, but he implies it for sure. A lot of what has gone on there in South Africa, as they've gone through the changes since apartheid, since that time, a lot of that reminds him, I think, of the United States. And there were benefits from the changing of the power structure back in the 90s. There was a benefit to that, but he also talks about the price that they paid during that period of time for the changes that they went through. Very interesting to me. I learned a lot. So this is a clip. It's going to last about 10 minutes. So it's up to you if you want to listen to that. But I think you'd find that it's something that you could benefit from a lot. So take a listen to this, and I appreciate your comments if you have them. And I'll wrap it up after McAlvany finishes this piece.
Interestingly, this morning, when I read my Bloomberg articles, first thing this morning, simple statistics stood out and would have summed up the answer we provided last week even better. It almost made me reflect on how important intellectual traditions, along with the freedom to debate those traditions, hopefully I can connect that for you. But
well, and South Africa's a place that you can talk about, Dave. Your father went there over 30 times. You've been there a number of times yourself.
Yeah. Today in South Africa, according to Bloomberg, there are approximately 600,000 people in private security. compared to 150,000 strong national police force.
Wow. Say that again. All right. 600,000 people have private security.
No, not
guards.
have private security. 600,000 people, that's what they do. They are in private security. They're carrying machine guns and protecting private citizens.
And how many police are there? I mean,
150,000.
So 1 in 4 is a police officer, but private security, 600,000 people.
4 times more.
Wow.
So carjackings and kidnappings force anyone that can afford it to protect themselves, their families, with private armed security. What does that say to you about a country that cannot provide safety to its citizens, lacks a justice system to hold crime in check? That is a failing state, maybe even an already failed state. And of course, these are, on a relative basis, it's not that bad. There's people who would scramble from other parts of Africa to get to South Africa as an even better place to be. If you're comparing it, say, to Zimbabwe, I could judge that better. And maybe a return trip, it's been a few years since I've been there, would give some insight. How bad is it? Is it truly a failed state? My most recent trip to South Africa was in 2016. But to be honest, it's been in a state of decay since the 1980s. When I was there as a young teenager, and I say that just to counter any suggestion that sort of my aging and nostalgia factor into the social commentary. Oh, it was great at one point. Oh, it's gone to the dogs. It had its issues then, and it still has its issues now.
Well, and when you went with your father back when you were much younger, I mean, you were with the South African Defense Force, and I think they were giving you special instructions just as you were driving around.
I'll never forget musing afterwards about the South African Defense Force guys driving us, again, this is in the 80s, and instructing us on defensive and evasive driving in case of a carjacking.
Yeah.
And you don't put that on a tourist brochure, do you? I didn't have my driver's license yet. This is just how we grew up. I kind of thought it was something everybody needs to know, how to deal with a carjacking. I had a very unique upbringing.
Yeah, you did. Well, and I think about your father warning that the ANC was a communist-backed organization. And at the time that I came to work for your father, Mandela was in prison. And Don, your dad, said, at some point Mandela may be freed and the ANC may take over. And it's not that there was anything necessarily wrong, particularly with Mandela, but it was tribalism and it was communism. And there were some forces that were larger than the issues that people thought that they were fighting, such as racism. There were other issues going on, and people with agendas were taking those issues and riding them like horses.
Yeah, narrative control is pretty critical. The government transitioned in the 1990s. Mandela and the ANC took over, and there was a dual reality that emerged. On the one hand, you had improved social justice. On the other hand, you had a further downgrade to a country's economic trajectory. That was solidified. And this is, plain and simple. Ideas have consequences. And, when you embrace corruption, it's rarely a companion to economic vitality. So the last several decades, things have gotten worse, not better, even though things from a political standpoint did change back in 93, 94. More often than not, when you look at corruption, it's a symptom of institutional rot, which, if left unaddressed, can contribute to a failed state.
Well, and I think we have to go back and look at why your father was so interested in South Africa, obviously from the gold perspective, but also from a political perspective. We have to go back to those Cold War days. Remember when Khrushchev basically said that we will control the areas that have the greatest natural resources. And, the Middle East and South Africa were on that list. Now, Khrushchev said that 20 years before you were going. But you went, how many times did you go to South Africa before you were in college?
Yeah, you're right. The reason we went was because it was a critical piece in the puzzle. If you looked at the world as a chessboard, this was really the place that you needed to make sure pressure was managed well. Between Russia and South Africa, this again goes back to the 70s and early 80s, between Russia and South Africa, they controlled 96% of the world's strategic minerals. So, of course, if that's Khrushchev's stated goal, then it kind of matters what happens. And so, we have a lot of history in South Africa as a family. I traveled there 4 times before I was 15 years old. My father was at one time considering moving us there, traveled to the region at least 30 times. His love of the country and the people ran deep. You had under the surface one of the most strategic reserves of minerals in the world. Above the surface, one of the most magnificent treasures on earth, natural beauty with few places in the world to match it.
And so you talk about where South Africa is today, 600,000 security guards for 150,000 actual national police officers. So when does crisis happen? I mean, is it a slow cook or does it happen instantly?
Yeah, that's, I think, one of the reasons I like Rudiger Dornbusch. He's an economist no longer with us. This will be an inexact quote, but crisis takes more time in coming than you think, and then it happens much faster than you would have
A little
thought.
like Hemingway when he talked about going broke. Right?
Exactly.
Yeah.
Slowly and then all at once.
Right.
Exactly. You're right. So that was the case. That is the case in South Africa. I think, frankly, that applies to the U.S. debt markets. How long can the markets ignore terminal math? Longer than you think, until an unwind of excess happens faster than you would have thought. Then one day everyone notices the problem, and the behavior within the marketplace is like the swarm of swallows, moving as one complex organism in an instinctively organized fashion. That's the nature of panic and crowd behavior.
Well, and we talked about Russia and South Africa and the Middle East earlier, but at this point, China, I mean, you look at geopolitics, and we have to watch what's going on between the United States and China. Are we in a slow cook, or are we about to have the all at once?
It's the same thing. It's both. Geopolitics exist in that slow and churning, nothing is yet burning state. That is the U.S. and China relationship, a pregame state of tension and stress, and the transition from slow to fast. It's a little bit like the button pushed in Star Wars, engaging the hyperdrive propulsion system and bringing us to travel at the speed of light.
Yeah.
But the first comment I want to make was about South Africa. Special thanks for those of you who joined us on the call last week. Sometimes there's numbers that stand out, and 400% more private security than national police. What does that say to you? Just knee-jerk.
Yeah.
You've got a security problem. Individuals are solving this problem because the state can't or won't. When confidence fails and the system doesn't support stability, you make your way as best you can with the resources you have. You solve problems creatively, intelligently, on occasion collectively, with other like-minded people.
Yeah, but what if the people who were supposed to protect you from the problems are the ones who are actually creating the problems? I'm thinking of the CIA,
That
the
takes
FBI.
me to Zuckerberg's admission last week that the CIA and FBI pressured Facebook. And of course, from the internal Twitter files released to the bevy of journalists after Musk acquired the company, confirms this as well. The CIA and FBI pressured these social media groups to suppress the Hunter Biden laptop story. Again, this is not conspiracy. This is Zuckerberg last week talking openly about taking calls from the CIA and FBI and being given explicit instructions.
Yeah.
We're not talking about the Hunter Biden laptop story. Questionable pay-to-play activity from Burisma, pushing instead a scripted story of Russian collusion and election interference. The interference in the election was irrefutably from the CIA and FBI, as evidenced by the Twitter files, as evidenced by the very words of Mark Zuckerberg last week discussing the instructions he followed. Indications of a failed state, when you desperately reach for control, when silence and dissent, silence is required and dissent is not tolerated.
Well,
this is the stuff that you see in China, where you cannot have a public opinion. We've got unrest on the increase, year over year, 18% more unrest in China. But they actually, if you counted what would be there if they had a free press, boy.
Okay, well, hopefully that was helpful and you enjoyed it. And if you have questions or comments, I appreciate you leaving those in the comment section below. Now, I wanted to comment. I forgot to say this at the beginning. I apologize. I'm in Seattle this week, and I'm visiting my son, David. And he is he's a movie producer for sure. And he also does corporate commercial videos for major companies here in the Seattle area. And he has a setup in his home. And he's allowed me to use that setup. So the background is a little different than what I'm used to using in Montana. But I'm enjoying it, and I appreciate his setup and letting me use his equipment. So thank you for watching.